From gas to groceries, inflation is having a big impact on many family budgets. But what effect does it have on your investments? Peter Sashecki from Everything Financial joins us now this morning with more. Good morning, Peter. Good to see you.
Nice to see you, Carrie. Good morning.
I want to ask you about this off the top. Breaking news this morning, the Bank of Canada announcing that interest rates will rise 0.5 percentage point. Perhaps not unexpected, but what kind of impact is that going to have on people?
Well, the biggest impact may be that raising it that much could cause a recession. So that could have an effect on everybody. What they're trying to do is raise interest rates to slow inflation. The target being doing something called a soft landing. Raise them fast enough or high enough that they don't cause a recession, but they do slow inflation. So this will cause people who pay variable mortgages or line of credits that are tied to the Bank of Canada rate to go up, and their monthly payments will go up.
So as you mentioned, the point of that rate hike is to stem the rise of inflation. What effect does inflation have on someone's investments?
Well, one of the biggest effects on investments is it'll affect what's called your real rate of return. So the real rate of return is the amount of money you're really making on your investments. So to keep it simple, if you were so fortunate to make 10% on your investments, and let's say inflation is 5%, then your real rate of return is 5%. But if the Bank of Canada and interest rates go up and say inflation doesn't slow down, it keeps going up, then that spread between what you make and what inflation is will get smaller and smaller. And so your real rate of return will be less. So you're making less money for your future plan.
Yeah, we often don't hear about that real rate of return. So what rate should your financial advisor be using?
Generally about 5% rate of return is nice and conservative. When you see things, people quoting 10, 11, 12, 13, yeah, last few years you were making those kind of rates once in a while in plans. But as you should always be cautioned is, that's not reality. That's not normal. Take it when you can get it, but it's not kind of how rates go for the long term. So you always want to err very conservatively on the side of caution and use a much smaller rate for your long-term plan and your long-term goals.
Yeah, how often should inflation be updated in one's plan?
Every year, and you're really looking at reviewing your whole plan every year, not your investments, but your entire plan every year. And what you do is you look at what the rate your financial planner is quoting and see that it's updated with really the 3-year history, the rate going back 3 years. Right now it's high the last few months, as we know, but this may be transitory, and this inflation, a lot of people feel is close to peaking and may slow down. That's the reports definitely out of the U.S. So if inflation slows down and stops, then the 3-year rate is fairly accurate, which is quite a bit less than the 7% and numbers like that you're hearing right now.
Okay, before I let you go, just quickly, I mean, a lot of people hear inflation, rising interest rates, and, our stomachs get into knots. I mean, what should we be doing at this point, Peter?
Well, I say this all the time, right? Trying to be the voice of reason, but stay calm. Don't make any knee-jerk reactions. If your investments have been taking a beating on the statement side, don't do anything rash and make those values that are down right now from their peaks in November to January. Don't make those decreases in value reality by making abrupt changes. We have these bear markets, these inflationary markets. These things happen quite a bit. I've been doing this for 30 years. I've seen a lot of them. Don't make the losses or appear to be losses realities.
Okay.
Ride it out, and you know what? It will change. This too shall pass.
Keep calm and carry on. Peter Sashecki with Everything Financial. Thanks for joining us this morning. Good advice.
Thanks, carry on. Have a great day.
Carry on.